Welcome to Quick Study. I'm Sarah Borgson-Keto. This is our monthly update of REIT market performance. I'm joined by Brad Case, NAREIT Senior Vice President for Research and Industry Information. Welcome, Brad.
It's a pleasure.
Now, we had a strong month in August after a bit of a pullback in July. What were the factors behind that?
Yeah, it was a strong August. REIT investors gained nearly 3.4% in total return just for the month of August. And if you look at the year to date, REIT investors have benefited very strongly from their investments. REITs have provided total returns of 19.84% year to date. If you compare that to the rest of the stock market, REITs are really very strongly outperforming. Large cap stock investors gained less than half as much, 9.9% on the year, and small cap stock investors have gained less than 2% on the year. So REIT investors have really been rewarded for being in the real estate asset class, and I think that's the key to what has happened during August. Investors are generally more comfortable that the economic recovery is going to continue. And that's going to increase demand for really all types of commercial real estate. But in addition to that, I think investors have really become more aware of how little new construction there is, really nationwide in all property types. The construction declined so dramatically during the liquidity crisis. And although we've seen increases in construction in several different property types, it's not enough really to meet the increases in demand for those property types. And that suggests that as the economy continues to expand, REIT investors are likely to benefit from continued improvement in occupancy levels and in rent growth, and therefore in net operating income and in their REIT dividends. So I think REIT investors are really in the middle of a bull market that, historically speaking, has tended to be very long, closer to 15 years compared to stock market cycles, which are closer to 4 years. So REIT investors are likely to continue to see improvements in net operating income and therefore dividends going forward. And that's, I think, what the market has responded to during the month of August.
Right, and so looking forward for the rest of the year, you see those fundamentals propelling the market ahead.
I do. If you look at, for example, I think there's been some discussion this month about the prospects for apartment rentals going forward, and what we see is so much unmet demand for apartments as recent college graduates move out of their parents' basement, that people are more comfortable that there won't be any over-construction in that property type because there's so much unmet demand. And we really think that that's true in all property types. So I think the market is really paying some closer attention to the low levels of new construction in all property types.
And were there any other particular sectors that you noticed during August?
Well, if you look at the strongest performing property types during August, they were REITs that provide infrastructure, that provide healthcare facilities, and that provide timberlands. So it's interesting that the strongest performers this month are really some of the property types that were not so prominent in the markets, some years ago. So investors are clearly becoming more comfortable with those property types as portions of the entire REIT market. And if you look at the diversification benefits, it's not just that there are strong diversification benefits within the REIT market, but of course very, very strong diversification benefits for investors who hold REITs alongside their other stock holdings. So for example, the current correlation between REITs and the broad stock market is less than 0.6, very strong diversification benefits. The current beta for REIT investors relative to investors in the broad stock market is only about 0.53. So very, very strong diversification benefits that bring down the volatility of the entire portfolio. And even the volatility of the REIT market itself is uncommonly low. It's less than 13%. Again, lower than comparable non-REIT stocks. So investors have really been benefiting from the diversification benefits of REITs at the same time that they're benefiting from the strong returns as REITs recover from the economic and liquidity crisis.
Well, thanks, Brad.
It's a pleasure.
And for more news and analysis on all things REIT, please visit REIT.com.